Please join me in welcoming Joe Kelly, Michael Goldstein, Clark Moody, and Rob Hamilton.
Awesome. It's great to be here. This is always one of my favorite events. I'm Michael Goldstein. I am the president of the Satoshi Nakamoto Institute. I think I'm good for moderating this because I don't think I've invested anything in my life. So I only have savings. But let's just go through and introduce Rob Hamilton.
Sure. I'm Rob Hamilton, co-founder and CEO of AnchorWatch. We build Bitcoin custody and insurance solutions. I'm laughing talking about the shout outs for open source. I think everything that we do on the stage is like there's a lot of open source that, enables things like these applications to get built in a scaled, secure way. So it's great to be here.
Joe Kelly, CEO and co-founder of Unchained. We do Bitcoin financial services with an underpinning custody layer where clients hold their own keys.
I'm Clark Moody. I run a dashboard with real-time data for the Bitcoin ecosystem. If you need any dashboard needs, check it out. I also brought my VC hat. So I am the technical partner at Epoch VC. We actually wrote a check for AnchorWatch very recently. And some other folks here, we've also invested in their companies. So it's great. I'm the only VC on the panel for the VC thing, so we'll see. We'll see how it goes.
We get both sides of the equation here.
Underrepresented.
So, this is especially, as someone who has never invested anything in my life, when you're looking at a business, you could also just stack sats. So my question is for the founders, what is it that makes you think you have something that can beat the Bitcoin rate? And for the VC, how do you find things that can do that?
It's really a great way to pump somebody up with confidence before pitching an investor there, Michael. What makes you think you can beat Bitcoin?
This is the new question that everyone has to face. I think that's one of the difficult things about Bitcoin. But I also imagine it creates better things.
I think it depends on what you want to see exist, because certainly for Bitcoin to flourish, you need services around it, you need products. And so I attribute, I think, a lot of early stage investing is trying to will something into existence that wouldn't otherwise happen. Helping something get through the J curve of not looking or being commercially viable in its first several years or even decade, and then there's liftoff at the end because it built something really important that wouldn't have existed unless people believed.
Yeah, I mean, to that question, it's absolutely the higher risk move to go on an entrepreneurial beat versus finding safety in a job and stacking sats, right? And I think that always has to be caveated because what you're talking about is like being the returns on Bitcoin. Risk and yield are two sides of the same coin, right? So I'm a poker player. The whole idea is that you believe that you have an edge on the general market, which would be alpha. And on a risk-adjusted basis, you want to be able to put capital at risk to get greater return. I would say AnchorWatch this month is 4 years old from the initial inception of it, and the Bitcoin price is only up 20%. But I think on returns already, they're paper, right? But like thinking about it on that risk-adjusted basis as a place to start. But even then, it is, there's definitely a little bit of, humility. You have to kind of drop some humility and say, like, no, actually, I can try and build something greater, right? And there's risk in that, but that's where the opportunity is. So from a sense also what you want to get out of life, a sense of meaning and fulfillment. I don't want to be 50, 60 years old, think about, the shots I didn't take on goal. I want to take the full effort at it. So that's part of it too, for sure.
There were a lot of VC words in that answer, so I don't know if you need the hat or not. But to invest in VC, you take the illiquidity premium. So you say, I'm going to trade illiquidity for a long time, 7, 10 years, in hopes that in these later years, something really blows up. Now, do we have that? Do we have long-term 60% gains in Bitcoin over the next 20, 30 years? Maybe not, right? So maybe Bitcoin is leveling off. So then building businesses, you can build network effects from something really small again, right? If you started with Bitcoin when it was really small, you made huge returns. Same thing for a company. You could invest $1,000 in like a little company and 100x that, but is Bitcoin going to do another 100x in 5 years? Yes, it is. So don't do anything, just buy Bitcoin. Panel's over. All right, sorry.
Well, I guess you could also say that the very fact that someone can go get a job so they can stack sats, someone somewhere had to do some kind of investing for that job to be available for them to do that. So, everyone has to find that balance of risk and reward, but also, like you're saying, what you actually want to see in the world. The next question that I had was, with in this broader space, as we could put it, when you step out of the sanity of Bitcoin and you go into the insanity of so-called crypto, there is a lot of noise and distractions. We get everything from meme coins to NFTs to ICOs a few years ago, and it seems like VCs are very good at eating that up. My question first is understanding why that is, but also then, given that, how do you as a finder create the signal for a VC to understand that this actually matters more than these kind of meme pump and dumps, and also how do both sides of this kind of get that signal through?
Yeah, I think just to start, jumping off Clark's previous point, that you're trading off illiquidity for potential upside in the future. And what the larger crypto ecosystem unlocked for venture capital was really quick returns and really quick time to liquidity, because you get to just basically side skirt all securities laws and print assets that people will buy instantly, right? So from an aggregate capital allocation, I think there's one largely diminishing returns on that at this point. If anyone's been around for the initial ICO phase in 2017, how quickly that wicked up and wicked down, the projects have to get more and more elaborate and do more to try and chase those initial returns. And your second question was around how to build enduring value. I think for taking a swing, you have to look at a large TAM enterprise opportunity, right? And understanding, just for insurance, if Bitcoin's a $2 trillion asset, notionally maybe in the risk markets today, there's maybe a total of $5 billion total across everyone, and that's like an opportunity to think about that and say, not only getting a larger slice of that risk market, but then additionally, as Bitcoin continues to monetize, how early the development of risk markets are. And that's kind of like one of the theses we had when we started Anchor Watch, was that Bitcoin will continue to monetize and grow as a capital asset. Necessarily, as part of a healthy development of that market, there is going to be risk financing and insurance.
I think traditional VC, it's supposed to be contrarian, but mostly it isn't. Mostly it's just a follower's game. And if you look at the Forbes 30 under 30 prison pipeline, they don't do such a great job picking, right, these long-term sustainable things. So it's mostly everybody following A16Z anyway. Not really many contrarians. So I don't know. I don't have many good things to say about traditional VC. We'll say.
Well, then in that case, what is it about, for instance, Epic VC? How do they, as VCs, what is it about their understanding the world that helps allow that signal through to actually see that signal?
Right. So at Epoch, we don't run on vibes only. Vibes are a big part of it. So we're super early stage. The first fund is less than $10 million, so very early stage. We write seed round checks, and the founders are very important at that stage, right? Can they operate a business? So are they stable under pressure? Do they work with people well? Basic sort of kindergarten level, plays nice with others, kind of things. Do they have good ideas? Is now the right time for the ideas? These are all the questions that any VC is going to ask. We also bring a little bit more due diligence than probably is necessary at the seed stage, but that helps to filter out some insanity. Now we'll see. So Bitcoin VC as a thing is just now 5 years old, let's say. The first funds kind of launched in 2021. So this is a bigger, broader question. Is it going to pay off? We're at the 5-year stage. Some of these early LPs are going to start to look for some payouts from the early Bitcoin VCs. Is that going to materialize or not at that 7 to 10 year mark coming up here pretty soon? And is that going to be a headwind for Bitcoin VC, or a confirmation or a repudiation of the model in the first place? Why don't you do tokens? Why don't you jump into AI? This narrower mandate of Bitcoin only. We'll see if it pays off. We're blazing the trail here too.
I would only add, I think some of the herd mentality and the psychology of investors comes from, well, who's my liquidity? So it's either in the early stages, it's later stage funds are going to mark up this investment for me, and that's how this kind of trade gets carried. So they're thinking through who among this peer set are going to understand what I'm doing and why it's valuable. And conversely, I think in starting a business like Unchained, in and among the noise of especially it's, I don't know about Bitcoin, but blockchain technology, that was the tagline of 2016, 17, a lot of that era. Our thesis was Bitcoin holders are real clients, real potential customers. This is the market. These are the real people to go after. So that's always felt like kind of our alpha, or the thing we brought to starting something real. And then even back to even the confidence piece about pitching investors and being asked, well, why just Bitcoin only? Why not everything else? Or I don't know that people are going to want to hold their own keys. Like you have to, you can choose to treat that kind of a thing of each of those rejections is a signal about the asymmetry of this idea. I know well enough that it's very real, so I'm going to keep working on that realness. And they just haven't priced it yet, or they'll get into my company at the price they deserve later, or something.
So sort of, sorry, I lost my train of thought there. I've talked to a couple sort of traditional VCs before about Bitcoin, and something I noticed is their interest in investing immediately goes to crypto stuff aside, it'll go immediately to something like mining, which is probably the most cutthroat industry, one of the most cutthroat industries in the world, let alone within Bitcoin itself. You guys don't do mining. You guys do other things. What is the nature of y'all's business where you think you're making something that can actually have that lasting value that would be valuable to investors?
I think a comment on the mining things. One of the things we observed, especially as like lending to miners, was really in vogue in 2022, and just that I think a lot of why investors gravitate to that business because there's seemingly a lot of known inputs into a spreadsheet, and that works at the credit committee level, that works at the IC level, that looks at the here's the machine that's going to print this kind of return, and so that flies through all those social and analytical processes. A business like Unchained that depends on client relationships, accruing Bitcoin on platform, developing, for many of our fundraising years, developing products that don't yet exist yet, trading features that aren't fully live. That involves still a lot of that carrying that hope or carrying that this will turn into something. And for us, it's just always been a factor of relationships. That's the most meaningful value, both internal and external Unchained, and what we have with the people we support.
And Rob, your business, what is it about your business that kind of has that more long-term sustainable value proposition that, as opposed to something like mining, which is just absolutely cutthroat?
Certainly, yeah. I think it is the two pieces of what our core business of what we focus on, right? Which is custody infrastructure. If you believe Bitcoin in this journey, I think when you see all this financialization happening with Bitcoin treasury companies, like even looking at things like STRC, just in general, as new financial products are built on top of Bitcoin, custody is the foundation of any other financial service that would exist. And if Bitcoin is better money, which I think most of us in this room agree and believe in, you're going to need scaffolding and infrastructure in general for how this would be kind of accessed through more traditional finance vehicles. Right next to custody, and I think you could view this as something that built on custody is being the foundational thing. The next question comes into is, well, what happens if something goes wrong with the custody, right? And that's where the idea of insurance comes in. But it far extends beyond just any product in general. Just thinking about there are going to need to be people that are going to be industry native who are around this tech, who understand how it works, to be able to build the best possible technology solutions. And when you're looking at a larger ecosystem, and Bitcoin maturing, it becomes a question of, you hear like all these stories of different banks that are getting ready to turn on custody infrastructure. They're all starting with renting, but maybe want to build it inside. I make this joke that I know most of the very good Bitcoin custody engineers in the industry, and they're not running over to any of these large banks that are trying to set this stuff up, right? So then it becomes an opportunity for people who work hard, build out their own knowledge and sense and applied knowledge of building out this, these solutions as an opportunity for, you're talking about like the longer enduring value that is immensely valuable to have that and not have to deal with the execution risk and time and execution, trying to go figure it out on your own and reinvent things, I would say, at a lesser quality degree.
So I kind of want to move into the sort of founder-investor relationship after we've talked about sort of the antagonism because of traditional VC mindset. When you are looking for funding as a founder, are there things, because of being in the Bitcoin world, are there things beyond merely the capital that become very important for you to be able to have access to through the investors?
Relationships. One of our lead investors the other week, I wanted to talk to somebody at a big bank I hadn't talked to, and within 2 days, it turned around with an intro to their digital asset person. So like, that really the network piece is probably the biggest. Being supportive while also perhaps trying to push for urgency or ensure there's the proper urgency in the business. That could be helpful. There's a lot there more on like the founder VC psychology dynamics and whatnot, but at least those would be my top answers.
At the super early stage, we could provide help with financial modeling and other things that are more professional that a one-man dev might not really understand, but a more financially savvy firm could say, hey, we can help you with some projections and some refinements on your business. And then there's the incubator type thing where you could centralize some of the HR functions and other things for multiple startups and get economies of scale that way. I don't know if we have too many Bitcoin incubators, though. It's time.
Jeffrey?
Well, just to echo and agree, advice, typically they have a lot of experience either in Bitcoin itself or in the ecosystem of companies that exist around it. So that advice and kind of trying to get like a fuller picture from a different perspective is really valuable, and also connections and relationships for sure.
Yeah, and I have an organization of my own, and I know when I had to get a fiat bank account, because unfortunately I do have to pay fiat bills in fiat because they haven't all adopted Zaprate as their payment solution. But because of that, I needed a fiat banker that I could trust to not fall for basically misinformation about the risks of Bitcoin. I'm doing very vanilla things with my money. It's not any kind of scams, but because of all of the stories that we've seen from all of the bankers, major banks, basically shutting down accounts of organizations, I didn't want to have to deal with that. And so being able to find a bank where I can actually go shake the hands of the bankers that I work with gives me that knowledge of a relationship that I know if anything happens, give me a call and I can help explain, before you do anything rash against me, I can explain what this actually is so that we don't find ourselves in that situation. So relationships definitely seem like a big one, especially when we have to render unto Caesar. So for someone in here who's maybe like thinking about starting a Bitcoin company, are there things that you wish you would have known as a founder raising money before you got your first dollar or sats?
I think this is the golden era right now with the acceleration of AI to be able to get quick prototypes, be able to demonstrate revenue. I think now more than ever, you can take a side hustle or a hobby and try to see if you can figure out unit economics, growth, adoption. I think that's immensely valuable, and something that I would encourage is, you may get the bug and want to do something or think that you've been wanting to do something for a while, but really, it'll be so much easier to fundraise when that day comes. When it's actually a Mark Andreessen idea that I got from him, but the best founders they find are people who have always gone one step deeper in due diligence and thought about the problem for a long time, and that combined with applied and actually building out prototypes, getting things live and running, not having it be a slide deck, having it be something real that you can touch is such a differentiator. And I think that would be my general advice, is really toil, beat yourself up thinking about it, and also being okay knowing that you may work on this for like a decade and not get anything out of it on a monetary sense. You have to be willing to walk through that door to start, to understand that that is an outcome, and that's a good risk profiling event you want to do before you get started, than halfway through having angst or regret about that.
I would say there's not one prototypical founder persona. There's lots of different types. And if you go listen to any sort of business history podcast, you'll have all these different types of people starting companies, and they have totally different personalities. There's like the rise and grind, cold plunge, 6 a.m., I'm always grinding. Then there's the dopey nerd who's just like, I stumbled upon this $1 trillion idea and just kind of hacked it together and doesn't know anything about business, but here I am. So it's everything in between. And don't be discouraged if you don't feel like you fit in one of these sort of boxes. Just go for it.
Yeah, I'm going to try to track assumptions and don't assume that a problem is solved that could still benefit from something really valuable or something that solves a niche. At Unchained, for instance, our first product was lending dollars against Bitcoin. We'd assumed that maybe custody was solved and trading was solved, but those became later, and we were figuring that people already know how to store their Bitcoin and where to buy it, but actually people still really needed the kind of custody that we developed for lending, and then trading next to that was also like a big accelerant. So just these ways that my brain, going back, I would have sequenced the products differently. Lending's really hard. It's got a lot of regulations, extra capital. So there's a lot of extra steps. But that it's still hardness and was valuable. And that's part of just never giving up and taking what lessons you have forward.
Yeah, it definitely makes sense, Rob, to get that proof of concept. You can just do things, and Claude can just do things. So,
also, when you're trying to do that initial fundraising, even if a VC says no, they will give you advice. They'll say why they passed. They'll give you areas to think about. They'll challenge your ideas. And I think going rapidly through that iterative process is very important as an initial market signal to be able to kind of solidify, the direction you want to take things.
So I want to get into the name of the panel, which has to do with the flywheel, which is that concept of basically self-reinforcing feedback loops of things getting better and better because you're moving in the right direction. It actually sort of accelerates things. One of the things that I'm curious how it fits into that idea is the locations we choose to actually do our work. And traditionally, we've seen most tech is obviously, we think of Silicon Valley, some in New York or whatever, but Bitcoin's been a little bit different. There's a lot of Bitcoiners in Austin, and there's a lot of Bitcoiners in Nashville, and we have representatives from each of those here. What is it about these places that do you think have contributed to the flywheel, and what's been special about Austin and Nashville?
Austin, we really lucked out. I mean, we've reflected sometimes that of the initial first 6 or 7 employees at Unchained, all of them were within like a 2-mile radius of downtown here. It just worked out. The right people, the right fit for who were already in Austin, who'd self-selected into Bitcoin, and so just being able to have those right pieces and ingredients together. I think we were benefiting by the culture of Texas and kind of the Austin and tech startup combo that we have here. And that's only grown. And we've just been fortunate to be able to support things like the Bitcoin Park and the kind of ecosystem we have here now. So the flywheel is getting even bigger.
I mean, the center of that flywheel in Nashville is definitely Bitcoin Park. I went to Bitcoin Park. I was living in Raleigh, North Carolina at the time, in January for the Nashville Energy and Mining Summit in 2022 in January. And by the 2023 Nashville Energy and Mining Summit in January 2023, I had already moved in. I had moved from Raleigh to Nashville. The concentration of people, a really great productive work environment, the amount of, either information or relationships that you're able to build because someone's just dropping by to see the park, and I could just be having a normal work day and then all of a sudden have incredibly highly valuable conversations, whether it's with prospective partners or for future investors. It is I think these third spaces, like places that people are able to come to and organize are just great focal points. And whether it's coming in on the day-to-day basis or coming in town for big events like this, which are like hyper accelerants, there's a half dozen events a year that are, a stone throw from my house that everyone from around the world gets to fly into Nashville, and I get to, receive, like kind of like the presence of everyone's company and like all of the value that comes from that. It's something that it's a focal point. Like it's also like a black hole. It just pulls everything in, and it makes it so much easier just to already be based out of there than having to fly in all the time. I flew to Nashville 6 times the year before I moved to the park because I just kept going every other month.
Yeah, the quality of discussion in person is different than on Twitter. Who knew? And you say things that you'd say in person that you wouldn't say on Twitter, and vice versa.
280 characters is hard.
Yeah, one of the kind of less talked about advantages of Austin and Nashville in conjunction is that they're a very short flight distance between them. So they actually we interact a ton. Rod comes in the morning and leaves in the evening if he has stuff to do here, because you can do that if you need to. And so,
And I fly regular. I do not fly private.
yeah.
We're going to build a monorail between the two, so it's like maglev,
That's right.
direct.
Yeah, Southwest just needs to set up like a Bitcoiner special. Some kind of like membership card you pay in Bitcoin and fly between.
Sure, perfect example of this. You came by in October last year, and we were talking about engineering, coding, and using AI, and you're like, oh, have you checked out Claude Code yet? And I was like, I haven't downloaded Claude Code yet. He's like, Michael's like, you need to go do that. And sure enough, like the next morning I turned it on, and I was like, oh, like I see exactly what's happening. And that's something that I got from you being in town and being able to stop by.
Being in town for just a simple event. It wasn't even one of the bigger events. So that was a cool thing where Nashville is close enough that I can actually get there and come back without having to be away from home for too long. Practically not at all. So that, I think, is an unspoken benefit of these two places rising in conjunction of one another. And of course, thank you, Bitcoin Park, for playing such a big role in that. With our bit of time left, we were talking about kind of the, we have to get over the hurdle rate, and we have to look into the future and build things that would otherwise not be there. When we look maybe 10 years into the future, which of course isn't infinity in Bitcoin terms, but when we look into that, what are some of the things that are able to be built through this flywheel and through the founders investing in companies that you guys have been doing that would have otherwise not been possible?
With my investor hat on, we describe Lightning as the connective tissue of the Bitcoin ecosystem. So we talked about that earlier, where Lightning is this sort of back-end thing. End users aren't really messing with it on their phones, but it's this open protocol, right? So an open protocol, value accrues to the size of the network. So the more people around the world that get on, the more and more valuable it becomes. And Lightning is this thing for Bitcoin for just consumer grade, everyday sort of transacting, whether it's on higher layers or it's on, inter-company settlement, all these things. So I see an acceleration of the network, right? And as the network grows, it becomes more valuable. And as it becomes more valuable, more people want to get on. And Lightning is going to be that, I believe.
And Jerry, you had talked about sort of that J curve, which sort of inherently implies that it's like there are things that would otherwise not be there. So what are some of those things?
If I knew and had good answers and was liquid, I would be allocating. Yeah, it's hard. I mean, I think I tend to frame things a lot around the kind of the inverse or the what's going to stay the same: sticky client relationships, the need for payments, the need for the kinds of basic things we have that in our financial life. And that's where Unchained's focus. That's just kind of that shrouds all that I get to think about on this stuff personally.
And the question is looking forward to the future, the nature of like the flywheel and
and basically how all of these things are making things like it, thanks to VC and funding and that sort of actual process. Mm-hmm. What is going to exist in Bitcoin that wouldn't have been able to exist otherwise, especially when we look that far into the future.
Absolutely, yeah. And I think, as Clark mentioned earlier, the typical horizon for VC is like 7 to 10 years. And, the earliest Bitcoin VCs just started maybe at the longest 5 years ago. So we're still, you could look at the current crew of companies been backed by everything that you've seen across. And I think this is where a VC adds a lot of value when you take an abstract technology idea and you're able to make it live implemented code. Thinking offhand, like the idea of eCash and then getting Fedi out of that, looking at recent investments in ARC in general between Second and ARC Labs, things that were just white papers, but it's not something that unless you have a well-capitalized company who's willing to take that swing and shot, you're not going to be able to quickly stand up everything to the same degree. I think, also like a lot of the territory that we push forward when it comes into like advancing Bitcoin custody in general has been able to extend across the ecosystem. And I think a lot of this stuff is just built on free and open source tools. And those tools actually do get better when in open source it's called upstreaming, where if you find bugs or issues or features you want to add and you just give it to the community, these are things that plug into the general ecosystem being strengthened because of the capital and investment and time people put into the project.
Let me throw a counterpoint in here with Nostr. Nostr did everything that the Web3 guys were promising. And it did it without a token, and that's why it succeeded. Open protocol with no token. And you hear all this Web3 social, Web3 comms, Web3 blah, NFT, blah, blah, blah. Nostr did it all because of open protocols and the ability to just try stuff without the need for VC funding. So it doesn't always work. You can't force it where the demand doesn't exist. So maybe that's a nice counterpoint, and I don't know. I got to throw the rant in about Nostr. Sorry.
Well, we have just a few moments left. Did you guys have any last thoughts about founders, investing, flywheels?
I think actually probably a revised answer even on the flywheel effect is even just thinking about the context of Unchained and how unfundable a self-custody company looked to people. And then Unchained has helped secure over $10 billion of Bitcoin, 10,000 clients, over 20,000 keys. There's something proven there that shows kind of what can be at the other end of that J-curve that I look forward to kind of being the kind of thing that helps some of those hard to fund pitches, have an example that does win.
All right. Well, thank you so much.